Hello, Bob Wazorek again. This is the second segment of Module 4, Equities. Here we're going to look at descriptors or ways of describing equity securities. And basically what we're going to do here is look at through, in this case, two Bloomberg screenshots that we're going to use those as a basis for our discussion and go do a tour around ways we would describe these equity securities. This can be done with public sources, Yahoo Finance, Google Finance, whatever source that you have access to. I happen to use a professional source, Bloomberg, but much of this information would be available free on the web as well. So what we're going to do is look at a couple descriptors. Those descriptors tell us about the company. So what do we want to know about a company? Well, we might be interested in something called its market capitalization, discuss what that is, where to find it, how it's calculated, the performance of the company, what's going on. Is it up, down? What's its year-to-date performance? What is its one-year performance? We might also be interested in the dividend yield. Okay, how much cash is this company going to pay me or expected to pay me over the next year? Then I'm going to look at introducing something called the PE ratio and the PEG ratio. We're going to get into more detail on those when we get into valuation, which will be in the later modules of the equity segment, but we'll introduce it here as we'll see it in this Bloomberg screenshot. And then also we're going to take a look at a particular preferred stock. Well, we have an example of both a common stock and a preferred stock. In this case, the preferred stock was issued under the TARP program, or the Troubled Asset Relief Program, coming out of the financial crisis of 2008, 2009. All right, so here's our buddy ExxonMobil. So if I blow this up a little bit, just take a little bit of a tour. I like this particular screenshot. It comes from Bloomberg, but you'd see similar information available to you in Yahoo Finance or Google Finance. This is Bloomberg. You type DES for description, and what's nice is it gives you a quick thumbnail sketch, a little paragraph about the company. So ExxonMobil you may have heard of, may be familiar with it, so this might not be too relevant in this case, but if someone asked you to look at a company or a client said, hey, what do you think of XYZ company, you may not have heard of it before. Well, you want to quickly get a thumbnail sketch of what it is the company does, what markets it operates in. Okay, other pieces of key sort of baseline information that I would want. I get the share price, so we could see it's currently trading at $86.83. Also get a perspective of where it's been. So I get the 52-week high, when it occurred, 52-week low, when it occurred, and now I get a sense of how the stock is trading. So right now, it looks like it's trading just off its highs. Also, other pieces of information that I'd be potentially interested in is the market capitalization. This is what we call the equity market capitalization. And what does that mean? It means it's the total value of the equity. It's not the total value of the company as a whole, but the total value of the equity. And I'm going to get into more detail in some later modules and when we talk about valuation about what that means, the total value of the company or the total enterprise value versus the total equity value. But this market capitalization, equity capitalization, is the value of the equity. And in this particular case, it's saying the equity is worth $409 billion. $409 billion is the value of the equity of ExxonMobil. Other pieces of little snippets of information as our beta. Okay, so we remember that. We've talked about beta a couple of times already. So this is the relationship between this stock and the marketplace, and what this is telling me is that it behaves very similar to the marketplace. It is effectively the same thing as the S&P 500 is what that's telling me, or should behave the same. Also, dividend yield. Okay, we said that we might be interested in that. Dividend growth rate. Okay, so not only do I want a current yield on my dividend, but I'm hoping over time my dividend grows. Okay, then it also tells me what that last dividend was, when the X date is, so when it trades without dividend. So a lot of good information here. Also gives me information about earnings and comparing those earnings to price. Because if I pay this $86 and change to buy the stock. Well, what do I get? Well, I'm entitled to some amount of earnings. So what it does is it tells me what the last 12 months earnings were, or trailing 12 months. Sometimes you'll see that as TTM, trailing 12 months, or you'll see it as LTM, last 12 months. It means the same thing. And in this case, we see that Exxon earned $8.42 in the last 12 months. We also see that there is an estimate for the next earnings. And we also notice, and this should be a red flag for us, should catch our attention, is that the forecasted earnings are lower than the past 12 months earnings. So what's being forecasted here is a decline in earnings. This is certainly something that we'd want to understand and get our head around before we went further with this security. So doesn't mean it's a deal breaker, but certainly a red flag that the forward earnings, the projected earnings, are declining as compared to what's happened in the past. Then this also gives me what's called a PE ratio. Okay, something we're going to look at more closely when we talk about valuations, but this is the price of the stock divided by the earnings per share. And we notice that it's trading at what we'd say 10.3 times earnings. And we notice that it's trading at a higher forward PE. This estimated PE is what is more commonly referred to as a forward PE. It's a forward-looking PE. It's based on the expectations for the next earnings. And another metric that we're going to look at when we get into valuation is something called the PEG ratio, or the PE ratio divided by growth. So this is that PE, and then dividing it by the growth here, 5.53%. Now that gives us a sense of what this company is. So not only do we know its name, we know its business, we know how big it is, market capitalization, we know how the stock's trading just off its 52-week high, we know the dividend yield, we know what the trailing and forward earnings estimates are, we know what the price to earnings ratio is on both a forward and a trailing basis. So again, now we're starting our analysis with a pretty good sense of what this company is all about, and can start formulating our view or opinion about the company. Oops. Okay. I've also now put together another slide for you. This is a preferred stock. This preferred stock is for First Enterprise Bank, okay, a financial institution. This particular security happened to be issued during the TARP program, under the TARP Capital Purchase Program, and TARP is Troubled Asset Relief Program. So they issued this to basically to meet capital requirements of this particular bank. Notice it's got a 5% preferred dividend. So again, the dividend is not paid unless the bank so declares it, but something like this would be cumulative, and the dividend rate is as such stated. Okay, additionally, you see that if this particular piece of debt is not redeemed prior to February of 2014, well then that dividend steps up to 9%. So the company, this bank, is highly incentivized or motivated to get rid of this preferred equity, redeem this preferred equity, repay this preferred equity prior to February of 2014, when the rate pops up to the 9%. Okay, so what did we learn? Okay, well, we took our tour through Bloomberg, got comfortable with the idea of market capitalization, the value of the equity. We looked at the performance of the company, where it is 52-week high, 52-week low, how it's performed so far this year. We looked at the dividend yield. We looked at the PE ratio, the price-earnings ratio, and then very quickly also the PEG ratio, the price-earnings ratio divided by growth. And then we saw a preferred stock that was issued under the TARP program. All right, guys, that concludes the second segment of our Module 4 equities. I'll see you next time on our next discussion of equities. Bye.